The magic of gold. Gold, gold, gold. Everybody these days is crazy for gold. But be careful. Just this past week, gold closed at a record 1900, breaking its record from August of 2011. So before you get too excited about it, understand that we want to get some facts on the table. And it's really, really popular now to be investing in gold. So let's talk about that. Gold always attracts gains in popularity during times of uncertainty, and so a lot of dollars flow in. In that respect, gold sales are almost like annuity sales. Uncertain times, you buy something thinking that, oh, I'll get XYZ, and the reality is that XYZ never really ever pans out. Get the gold analogy there? Anyway, here's the numbers. Just how much chasing is occurring with gold these days? It's going to frighten you. 1 year ago today, gold ETFs, exchange traded funds, so gold funds, if you will, held a total of 118 billion of assets. Today, that number is up by nearly 100%, 215 billion of assets. Over 20% of all the money that is held in gold exchange traded funds flowed in during the course of this year, 2020. A record 40 billion so far. That's 8 times the amount of dollars that flowed in during the same period last year. That is the very definition of what it means to chase return. And the reality is that if gold is just now, 9 years later, approaching the peak that it hit in August of 2011, that would mean that over the 9 years, the annualized return of gold would be, in fact, zero. That doesn't sound like much of an inflation hedge, which gets us to the second item to consider if you're getting a little bit too crazy about gold, is the actual returns. In fact, the actual returns for gold over time are quite terrible. It's actually a pretty poor hedge against inflation. If you go back to even a longer period of time, so if you just compare current price versus where it was 9 years ago, there's no return. If we're just now getting back to where we were in August of 2011, that means that over that 9 year span, that's a zero return. If you go back even longer, and we often encourage folks to look at long-term trends to get an accurate view of how it makes sense to invest your money, right? I mean, it's not enough to look at the past 3 years or the past 5 or really even the past 10 to get an accurate view of, okay, well, what's the return in this particular asset class over time? And so if you pull the perspective back a little bit and look at gold over a 40-year period of time, let's go back to 1980. So that's basically 40 years. Gold during that period of time has a return that is adjusted for inflation, because that's, of course, everybody says gold is an inflation hedge, so we got to get gold. If you adjust the return for gold for inflation over the course of the past 40 years, it's a negative number, negative 0.4%. Meanwhile, if you compare that to all the other options, stocks 7.9, bonds 6.2, even cash over that 40-year period of time 1.2%. So if you're thinking that gold is some magical inflation hedge, we encourage you, don't chase the returns, look at the actual numbers, and make a decision from that. In fact, if you run the numbers, gold would have to go up another 52% from its current price to even match the inflation-adjusted level it hit in January of 1980. But hey, why confuse actual performance with reality? So let's talk about reality. The reality of gold. It is an asset that becomes very popular during times of fear. And there's a suggestion out there that gold is somehow going to become the universal currency, the dollar is going to disappear, and we're just going to go back to walking around with gold bars in our pockets. Okay. In a word, that's a ludicrous suggestion. Understand that the world is moving to electronic payment process and away from physical currency in the first place. The COVID pandemic is certainly accelerating that. Stop and think about that. The COVID pandemic is accelerating electronic payments. E-commerce grows at 16% per year, every year for the past 20 years. For the year end 2018, which would be pre-COVID, more than 80 million mobile phone peer-to-peer payment users occurred. That was pre-COVID. How much do you think that number has increased? You probably aren't using peer-to-peer because that's mostly the younger generation. The other reality on gold is the cost. The cost and logistics of gold, costs are very high to buy it and to sell it. Usually about 5% to 10% transaction costs. So if you're buying it and then selling it, you've got to make at least 15, maybe even 20% on a return before you even break even. That's the reality of it. So don't be caught up in the glitter of gold. Avoid that at all costs. Don't get caught up in it. Remember, don't chase returns. Pay attention to what the historical returns are and have a little bit of a dose of reality when you invest your money. And I think if you apply those three principles to gold, you'll come away with a very different conclusion than what many people are that are chasing that metal these days. We'll take a break and return after these messages here on Dollars and Cents, News Radio WFLA Orlando, 96.9 The Game.